following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
The following takes place between 2 p.m. and 3 p.m.
Yes, it does. Welcome all to another exciting edition of the Power Trading Hour. Me, your humble, lovable, squeezably soft host that couldn't help but play that excerpt from 24. It was kind of interesting the first couple of years. Tiresome later, but still neat. Anyway, we've got a market that is not counting down quickly to an atomic bomb going off. It, in fact, is snoozing its way into an FOMC meeting announcement come Wednesday at 2 p.m. In the meantime, we just have to kind of get through the Apple earnings announcement. And that Apple's earnings announcement will be, of course, after the bell tomorrow night. And till then, I think, we've got some earnings. We'll get into that in a minute or two. But it's a lot, I guess, was never in the Army, but they always said it was hurry up and wait. I think that's exactly what we're ready to do, and that is hurry up and wait. In the meantime, I think it's time to get this party started.
That it's all just a little bit of history repeating.
And on this day, in 1825, the Erie Canal is inaugurated as the New York City hosts a flotilla of boats with a parade, banquet, fireworks display after they traversed the 363-mile run from Lake Erie, financed with $6 million in stock and bonds in 8 years to making. The canal finally cuts shipping time from New York to Buffalo from 3 weeks to 8 days and slashes the cost of transporting goods from $100 a ton to $15. And of course, one of the major things that kickstarted the original industrial revolution in the United States, and that is, of course, being able to move all that iron ore and other stuff around and do it very cheaply, efficiently, and in mass quantities, as it were. But on this day in 1825, you could do something that would change the world for $6 million. I don't know if you can do that anymore. After the bell tonight, we've got Broadcom, Cheesecake Factory, Edwards Life Sciences, MicroStrategy, PMCS, Sierra, Sanmina, and Solar Winds. Of course, we still have yet another 150 S&P 500 stocks this week. So buckle up. I want to say buttercup, but that's probably not correct. But buckle up, because I think past Wednesday, we'll probably really start seeing these, once the Fed's out of the way, we'll probably really see the market starting to move on these earnings numbers. I think until then, there is going to be a lot of people holding their breath, like when you go by the cemetery, trying to get there. It actually goes to the Niagara River. Never been on it. Didn't know it. Of course, we've got other things going on out here. And, of course, part of that is breaking the law.
Breaking the law, breaking the law, breaking the law, breaking the law.
Well, we've all wanted to throw a few of these high-frequency traders in the pokey. Today is the first trial of any high-frequency trader. Michael Kosokia of Rumson, New Jersey, is in court today. He becomes the first criminal defendant tried under the anti-spoofing legislation included in the 2010 Dodd-Frank Act. Now, this is where you start putting in orders and you have absolutely no how can I say that? You have no intention of ever initiating those orders. The only reason you put them in is to slow down the system and give you an edge. The case also promises to shine a light on the secret world, one that accounts for about 50% of all trading volume. It's helped mint the fortunes of some of the Chicago's wealthiest and most generous political campaign donors. Yes, they throw tons of cash at the politicians. Among the purported victims to testify is a representative of Citadel and a giant hedge fund founded by Illinois' richest person, Ken Griffin. And of course, even one of our original guests on the show, right after the flash crash from Nanex, Eric Hunsater is, I think, going to be a major person testifying in these, as he has the actual data to show what this individual was doing on a daily basis. And, he put in orders for, $50 trillion worth of stocks and bought, a couple million of it. Most of it had to do with, of course, just slowing down trading systems to give themselves an edge. But it has been illegal since 2010 to put in orders you had no intention of ever executing. And we'll see whether or not this actually has the intended effect that Dodd and Frank thought it would when this was passed. But first, just the first day of that. I've read it. It seems somewhat complicated. It may tend to scare jurors because it is fairly complicated. Maybe they'll have professional witnesses that tell people how this all works. But I have a feeling if they have any dummies on that jury, it's all going to go over their head, because this is a lot of really in the weeds kind of stuff. But today is the first day. What else do we have? Home sales fell 11.5%. Seems like October, November is becoming a very weak month of the year for home sales. This, of course, last year was pretty much the same. Economists had estimated that sales of the new single-family houses were going to fall 0.6 compared to the prior month, and at an annualized rate of 549,000. The data for August was revised lower too, though, to 5.2% from 5.7. So we're starting to see this really, by the time, it may even be more a traditional home selling business, which is people try to move in the middle or early part of the summer to get ready to have their kids in school by the fall. And of course, that pushes a lot of this selling very far forward into the early summer. And by this time, not a lot happening. Of course, down here in Florida, a little bit different. You really start to see a lot of people think about buying homes in November down here, when they look and decide that if they have to spend another winter up north, they're going to kill themselves. And they all fly down here and try to find some place to land. Manny, Mo, and Jack may not be very long for this world. The car part supplier Bridgestone is buying out Pep Boys at $835 million. That makes it at about $15 per share. The deal takes the auto repair and service center off the market at a premium more than about 23%. PBY is the symbol on it. This has been the auto parts supplier and, of course, service station that never got the kind of love that all the other auto parts manufacturers or suppliers have gotten, like AutoZone and the rest of them. But I knew thee well, Manny, Mo, and Jack. PBY is the symbol on it. Of course, this week is also going to be a little bit different. We've got one more week of this. And what is this? This is the time between when Europe goes on daylight savings time and the United States is on daylight savings time. You've got 2 weeks in the fall and 1 week in the spring. And, of course, this means that European markets now close this week at 12:30 instead of the normal 11:30. And, of course, a lot of people are always holding their breath until that European close. And at that time, they can figure out what they want to do at the end of the day. But, that's going to put kind of a slower market together. Just typically, if you look at these weeks going back about 10 years, But keep an eye on that too. I saw an interesting research study over the weekend. It goes back 14 years of stock return data between 2001 and 2014. The sample included 60,000 observations consisting of companies trading on major U.S. stock exchange with at least 100 million at the beginning of the period in capitalization. They rated each stock on a number of variables, and of course those variables were unusually high trading volume compared to the last 3 months, high short interest rates compared to the last month, large accounting accruals, extreme valuations, and high growth expectations. So basically, they had 4 little check boxes that could go off. Stocks ranking in the top quintile on at least 3 of these variables were significantly likely more to experience a price crash over the next 6 months. And probably the most interesting part of it, and we kind of know it, but I guess it wasn't a good way to put a figure to it, and that is 70% of all price crashes in individual stocks happened at earnings on the day, evening of, and next morning after earnings. And if you're looking for the probably the single best way of staying out of a crash, probably not being long during earnings is it. It is a mad. It's kind of a angry, maybe even miffed market. Right now, a slow market. And of course, as we look at the S&P before, we're off 5 points on the S&P cash, just a little over 2 billion shares on the New York Consolidated Tape as we start the show. And, we're off, 3 or 4 points on the NASDAQ. My guess is this thing is going to go very deep and very quiet until we get to Apple. Probably get a little bit of volume on Wednesday morning, and then everybody's going to hold their breath until the FOMC meeting. So we probably have a lot of very tight and low level of volatility into that. But, Apple, one of its big movements, at least from what people have thought, and it's very unclear why that came out. Of course, there's some lawsuits. There is the Apple TV. A lot of people thought that they were going to advertise or at least say that they got at least 1 or 2 more major studios in Hollywood to go with them. Really didn't get that. A lot of different reasons why Apple is down today. We'll take a look at that in the charts. But give me a call. Got plenty of time today. It's going to be fairly quiet. We'll talk about some other things going on in and outside of the market. But give me a call, 877-927-6648. You can email me at path@tfnn.com. And, of course, you can put a message in the den. And we'll be talking about that Apple in the next segment here. We'll bring up the chart. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pezzo, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we go right to a caller. John in Philly. How you doing today, John?
Good afternoon, David. By the way, I love those little audios you're constructing, American Pie and what have you, Fed money dying and what have you. It's fabulous.
Yep. In fact, Fleckenstein's daughter sent me an email over the weekend.
I love it. That's great.
Anyway, what's going on?
David, you had done a fabulous job of keeping us kind of up to date with the fundamental trends, sales, earnings, and prospects for Microsoft. And I recall in the past 6 months, you had made a fairly sizable point of discussing the adoption of Windows 10 and the new pricing policies, and how, since it was being distributed at first launch for free with subsequent then periodic or annual payment subscription fees coming, that earnings might take a little while to get ramping. Mm-hmm. But, of course, in the June quarter and now this past September quarter, the earnings have really motored. And now that you've had a couple of days to reflect and ponder, I just wanted to ask if you could share with us what you see in the sales and earnings trends and what that might support in the stock looking, say, 12 months out.
That's a hard one, but what really happened in this last quarter were two things. One, they got rid of a lot of dead wood from the Nokia deal.
Yes.
And 7,800 employees, they were able to, I was thinking that it would be much more likely that they would have gotten this pop in the next quarter. But they were able to get a lot of those 7,800 jobs out. They announced another 1,000 job cut on earnings day. And, of course, they had extremely good numbers coming out of the cloud business. They are now a extremely tight competitor for Amazon, mostly because of the stuff that they offer big businesses like database services and a lot of the other stuff. Amazon does that too, but if you want to use Microsoft stuff to build your business out on, that's pretty good. Amazon uses a great deal of stuff that is either open source software like Unix-based servers and other things that they sell. But a great deal of that stuff is open source and or not really backed by Oracle or Microsoft or that kind of stuff. So Microsoft's done a very good job of continuing to sell their products, which of course are premium compared to free. But they've done a good job on it, and it wasn't so much the PC business at all as a lot of firings and, of course, a great deal of business that people didn't see coming, launching the new 2016 version of the server, some other stuff like that. So a lot of the stuff that I never see, on the corporate level, they did extremely well on, and the 365 Office system where they license it out for the year, that continues to do very well for the Office system instead of selling it at one hunk and then going away.
Gotcha.
For 10 years and still using Office 2003 or something, right? So
and of course,
a lot of that stuff is done very well. I'm just wondering when they get, they've got two more things that are probably coming out in the next quarter or two. One is a pay system that's going to be embedded in Windows 10. So if pay ever gets going anywhere, that'll be interesting.
When you refer to pay, are you talking electronic payment functionality or something along those lines?
Yep.
Gotcha.
And I don't know if they've got a deal with Samsung, but Samsung, we're 1 or 2 days from Samsung rolling out their Samsung Pay with their new phones that work with any of the Omron-style magnetic tape reading terminals. Gotcha. So I know that the updates have gone out on some of the Samsung's phones. I just don't think that they've turned it on yet. But I think it's either in a day or two. So it's either October 28th or 9th.
Thanks for that input. With the stock having literally gone almost, within a dime or so, Friday to the high that was reached, gosh, it's record high 15 years ago or whatever that was. Can you envision earnings and sales being a force such that, looking out 6, 12, 18 months, this stock moves over and stays over that level?
I could see it. They're launching their hardware today. We'll see how that does. But I'll answer this more when we come back.
Thanks so much, David.
You bet.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And it's hurry up and wait time. We're off 5 points on the S&P. Cash volume is light, 2.16 billion shares. I expect it to go a great deal lighter into the FOMC meeting. And, of course, we're probably going to probably have some short and sweet and terrifying minutes during earnings announcements, especially for Apple tomorrow. And the question was, before we left from John in Philly, was Microsoft, could we see this continue on? And I think we could. I am expecting, though, that maybe the stock's a little ahead of itself here. I'd like to see that a lot of this gap get filled. And then I think we could continue to see Microsoft move higher. Certainly the hardware, they're now, in fact, there was a lot of YouTube videos over the weekend mocking Apple for falling asleep at the switch and letting Microsoft get so far ahead of them and being more Apple than Apple was. And like I said, that was part of it. There's part of that Apple never put anything together for this Apple TV business. And a lot of people were looking forward toward some kind of announcement this weekend that they got a bunch of deals. I've told you it's been incredibly hard for Apple to make deals in Hollywood now after what happened to the music business that they were in. Everybody is treating them much like a leper. And especially in the video business, they don't want the same thing to happen. And that is Apple make a huge amount of money off the devices to play all this stuff And of course, the people that actually make the content get little or nothing. And we continue to see that. Anyway, I think that Microsoft's maybe a little bit ahead of itself. I think that we're still probably going to see slow PC growth, maybe into next spring. And then I think some of the new things that they have out are probably going to be in a second generation by then. And I think all the reasons and excuses to not buy are probably going to go away. Now, of course, all has a lot to do with what's happening in the economy. The economy is probably going to go soldiering on, but to me, it looks like the market may be too highly valued by a huge factor, in my opinion. So I could see that a lot of these stocks could pull back. But I've said this before. I can't say that the stock price will be up. I can tell you that Microsoft has not had this kind of energy since probably, I'm going to say, late 80s. To have a CEO that is very good at setting and getting good people and letting them do their job. He's no Steve Jobs. He is finding visionaries and letting them do what they do best, which I think is probably a better model than one size fits all in these days. But there's a lot of that. If you want to look at Ford, if you want to look back in the history of Microsoft, Apple, you can look back to the Ford Motor Company, where, of course, they were the number one proponents of you can have any color of car you want as long as it's black. Well, they left a pretty wide open market for other car companies to come in and build cars with things like cup holders and different colors and leather seats. And, you know, they were able to move customers up into different models based on Ford really trying to keep it simple forever. And unfortunately, that almost always leaves the door open and the wrong dog comes home. But Microsoft, I think, is doing everything they can in their power to do things right. It becomes problematic, though, if the market pulls back no matter what. But I don't think they could do anything. They're not doing anything wrong that I really see, where Apple is starting to stub its toe on many things. Is this all because Steve Ballmer got dumped? A huge amount of it, I think, is. There were almost all these things that Apple or Microsoft is doing were things that he would not fund, and people were quietly and dutifully trying to get these things done. And guess what? Ballmer just wouldn't fund these things, or if he did, he made sure that he put his stamp on them, and of course they failed. From the Nokia issue to the original Surface RT platforms. A lot of the stuff that he wanted to get involved with were directly, weren't bad ideas, but he decided he had to put his stamp on them, and he knew little or nothing about technology. And that is the problem with all companies in technology that have CFOs that have become CEOs, which is something I've been talking about for several years. That was Microsoft. Now that is Apple. And, people that live and die by numbers have a tough time running long-term computer companies that have to always be reinventing themselves. There was a lot of that going on back then. Anyway, Microsoft, pretty good. We said we'd look at Apple, too. We talked a little bit about Apple and their problems. Of course, this got right back up to pretty much this gap down. It happened with decent volume, 97 million shares back on the 11th of August. And we got into it with 59 million shares. So not a whole lot out here that makes any bad sense. Now, can this just be the market winding up? It could be. But it's hard for me to see the catalyst for Apple going much stronger. I suspect when we see the earnings out after the bell tomorrow night, I'm looking for a couple bucks lower. I think that they're just going to whiff on the expectations or make their expectations. And so far, from what I look at, it just looks like not a whole lot going on. Technically, you could see a lot of problems where this thing had been an asymmetrical triangle. You can look at Friday as the false breakout and then the move back down today. If this wasn't earnings, I probably would have been shorting Apple this morning, but I don't see a whole lot of reason to do it into earnings. We'll go to Mike in Lakewood, California. How you doing today, Mike?
Good morning. How are you?
Fantastic.
Yeah, my question was generally, what do you think of the cybersecurity? The whole area, as you can obviously know, is being killed, and I'm a little surprised that Palo Alto Networks seems to be leading him down, where everybody keeps saying that's the best one. So, what's your overall opinion?
These CEOs, I go back because one of the things I designed in the 90s, we were building digital disc recorders before there were TiVos, everything else. We were building them for animators and people in special effects and television in Hollywood. And one of the things that we decided to go ahead and do was branch off into the security business. So I started going to all these security conferences and conventions in the year leading up to us actually shipping one of these things out. In fact, if you Google Digital Detective, you'll probably see a picture of the box that I designed and built. Anyway, what I did find out is that back then was that CEOs are absolutely the cheapest when it comes to spending money on security that doesn't involve them. You know, they're more than willing to buy, you know, a bunch of Israeli commandos to protect them. But when it comes to actually spending money for infrastructure, that kind of stuff, they continued at least until they got sued into submission into the early, probably about, I think there were some major cases about 2005, 2006, where they lost major amounts of money for not having it. Now, no one can even get insurance at a bodega if they don't have some kind of CCTV equipment. And I think it's going to take a similar kind of thing where these CEOs have to pay some really big fines and or the government gets involved and makes it mandatory. But right now, everybody just looks at the money that you have to either pay Palo Alto or Cyber, I want to say CyberArk, but that's not it.
Yeah, CyberArk, CYBRZ.
Yeah, CYBR.
You know the big ones, FireEye, Palo Alto, CyberEye, and there's a few more.
FireEye's got some tremendous products. Palo Alto is more traditional. It's kind of like the equivalent of the chain link fence with a razor wire on the top. It keeps people out, but once people get in, a real problem. You see a little bit more of that with CyberArk and completely with FireEye. They are really on the inside looking at what happens. And from a variety of things, one, if I don't know about it, then I don't have to bring it up and tell investors about it. Is kind of a real thing, you know.
Yeah, I don't mean to interrupt you, but I don't pretty much. I would have agreed with your argument up until about a year ago. But do you still think that now that people are going out and buying, I'll call it cyber insurance, or maybe another term for it, and also what happened to Target CEO and I think the Sony CEO fell also. Don't you think now we're finally reaching the tipping point where people that don't have these systems, they can't use the excuse anymore, I didn't know about it, that if they do have a problem, and more obviously having the problem, I mean, they're going to get sued up to whatever for not having it. And that's the way I'm looking at these things, that we're looking at a big shift coming, if it's not now, very, very soon.
Well, the same thing happened in the CCTV market.
Yeah, I don't disagree with that. I'm sorry, go ahead.
Once it became more expensive to not have it, people bought it. And right now, it's still less expensive to not buy these things than to buy them.
Okay, all right.
And at least that's the way they're looking at it, right? Yeah, so this Target guy got taken out and shot, the CEO, right? Well,
right.
It's not going to happen to me. How many times have we heard that, right?
Okay,
I can drink and drive. I've done it 100 times. You know, I'm not going to hit anybody tonight, right?
So
there's always that kind of it's not going to happen to me or my company. And to tell you the truth, how many have we heard of in the last 2 months where everybody just acts like it's the natural order of business?
Okay, I wanted your input, and I appreciate it very much. So you have a good day.
That's when you look at the earnings and what the CEOs of the 3 big or 4 big companies are doing, and even Palo Alto is, that they are really having a problem getting these CEOs to spend the money to actually have any offensive security. They will pay a little bit. They'll do some things, but for a great deal of it, it's still the idea that unless we're absolutely forced to spend this money, I want to make my numbers this quarter. So, I think that there's going to be some kind of thing, and that will be the end of it. It'll either be lawsuits or it'll be something else. They can't get insurance unless they have it and or an act of Congress, literally, right, to force liability into this. But right now, the laws are kind of written to protect the companies. They didn't, they say that they've got security, but they don't. It's not really offensive security. It's basically that chain links and the razor wire on the top. As soon as someone makes it over the top, well, we had the razor wire and the fence. We told them to stay out. Wasn't like we invited them in. And so far, that's been good enough that these subsequent CEOs have not gotten into trouble yet. It's going to take a few more getting fired and or some big lawsuits and or the government getting involved and saying everybody has to have it.
Okay, well, I appreciate your input. You have a good day. Thank you.
You bet. There's going to be a tipping point. Right now, especially in the last, I'd say 6 months, CEOs are much more worried about making their numbers than having a big egg on their face like the Target CEO. But there are problems on that. There's some discussions in the den right now about Facebook and some of the other stuff. But I don't use my same birthday on any of those sites. I write them all down. They're all phony. I use different addresses. I use everything. The big problem is if you put everything the same on all those sites, they will link you up, figure out by birth dates, by your addresses, by IP addresses. They'll finally figure out where you are and start putting all that data together. And then, of course, that makes you a big target for hackers. But if you can, the only reason they ask you, they say, for your birthday and that kind of stuff is to make sure they got some security questions they can ask you. Just lie about your birthday. That's the best way of being not chased down. But, yeah, too many Facebook accounts, too many Instagram accounts. How many people on Facebook have told everybody they're leaving for a vacation for 2 weeks? A giant invitation for the criminals to come in. Anyway, we'll be back in a minute. We'll be looking through a few of these other companies before we close the door on another wonderful episode of the Power Trading Hour.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yes, we are on the ride to nowhere for the next couple of days as we wait for earnings and the FOMC announcement. But after that, I think it's the wild, wild west. So we've got a couple of days to take some deep breaths, start looking at charts and figuring out what we want to be doing with our money once the action starts. Got a question from Pete. Pete is from nowhere, apparently. Anyway, Pete says, what do we think about GoPro and earnings tomorrow? To tell you the truth, it got a monster short interest on this thing. Are sales going to just instantly stop? I don't think the answer is yes. This thing is pretty much as beaten down as you can get. I would be watching out for some kind of short squeeze in this. I wouldn't be short it, but I couldn't be long it either. You know, this is one of these stocks where maybe if you had a real quick trigger finger during earnings announcement, if the numbers are not that bad, I would not be surprised to see a $5 rip in this thing, because I think it's got 15 or 18 days to cover. I didn't look at it last week, but from memory, it was something god awful like that. So these stocks can run at any time for any reason, and it will have nothing to do with earnings. So could this thing rip back up to 45 bucks? I think the answer is that it could, but I think all the news on this one has been poor. I didn't bring it up. I think maybe we brought it up a week ago, but in the Tech Insider issue. But the biggest problem with GoPro is that the government and the FAA is going to start licensing drones. And the idea has been that these GoPros were going to be all over these drones come Christmas time. But now everybody's probably going to be thinking twice about buying a drone if you have to license them with the FAA or some other government agency, and your kid does something stupid with them. But that is the big thing. You know, this is all going to be unregulated. If you had a small drone, no big deal. But they're going to be in a lot of headwinds. A lot of the things they talked about just haven't come up. So I couldn't really belong them. But if I was playing this and trying to figure out what was happening, I think you could see a nice little short squeeze in this thing, and then everybody pile right back on it. My guess is it's going to continue lower over time. But if I was a betting man, I would probably have my finger on the buy button during earnings for a very short and sweet and rip their faces off short squeeze on this stock. If things really are horrible, which who knows anymore, I think that number we talked about in the beginning of the show, where 70% of the crashes happen at earnings, is a good example of just how the markets have changed. I didn't get into it with that survey, but you know, in the old days, all the stuff used to leak. Especially around 2000, you had a pretty good indication that someone knew something. But with the fines and all the legal ramifications of letting this stuff leak, since probably about 2006 or 7, it's really been hard to get information out of these companies before actual earnings. And so I just try to, as much as possible, unless I really have a fundamental belief in which way these things are going, I just try to avoid them on earnings. But yeah, I'd be thinking about this one for a short squeeze. Anyway, you all have a great, safe, and wonderful day. Check out Andy's articles on Seeking Alpha and others. What else? About.com, Seeking Alpha. Got an editor's pick out here. Got about 10 new articles. He's apparently very busy over the day. Anyway, make sure and check those out. I'll put them in the den for those folks. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.